want everyone to understand these patterns because there's only a few of them, and it's really what I'm tracing. And within the world of corrective patterns, this is a correction, three-wave correction, an A, B, and a C. There's three types of what we call flats, which are corrective patterns. A regular one, which is you have an A wave, B wave retraces most of the initial drop, and then a final drop that takes you below the bottom of that A wave. And we see these everywhere. You can call it a regular flat or a flat. 2014 or 15 to 2016, very clear example. 1, 2, 3 is your A wave, 1, 2, 3 B wave, and then your C wave is always a 5-wave drop. 1, 2, 3, 4, 5. And you can see the B wave retrace most of the A wave, with that C wave taking you just a little bit lower. Very clear example of that type of a corrective pattern. The other one we see regularly is called an expanded flat, where you get an A wave. The B wave takes you above the top of the A wave, which is pretty sneaky. And then you have a really devastating C wave that takes you sharply below the bottom of that A wave. And we see this quite regularly too. I mean, look at this right here. The top in 2018, 1, 2, 3 A. There's your A wave. And then 2019 was your B wave. You see how it went well above the top of the A wave. And then the COVID drop was a clear 5-wave drop. And I don't care what you call it or when I want to define it, this is as clear of an expanded flat pattern as we ever see. And the final pattern is a running flat, where you have an A wave, B wave retraces most of the A wave, and then the C wave actually doesn't go below the bottom of the A wave. And when you see that pattern, this usually precedes a really strong bullish trend. And we saw that in 2020. Very clear example right here. 1, 2, 3 A, 1, 2, 3 B, then a 1, 2, 3, 4, 5 C wave that doesn't take you below the A wave. And what followed was, the 2021 bull run. So my point being is that these patterns are everywhere on all time frames. I mean, take a look at this. I'll say this. I'll show you this last one. What does this look like? You got A, the B wave retraces all of the A wave. Then you have a 1, 2, 3, 4, 5-wave drop that takes you just below the bottom of the A wave. That's a very clear flat pattern, regular flat pattern. This is the 2000 top to the 2009 bottom. This is a 10-year flat playing out. So that's my point, is these patterns are on all time frames. And so that's what I'm tracking here, is I'm tracking a regular flat pattern that I think is playing out. You have 3 waves down, 3 waves up, followed by a 5-wave drop that will take you below the start of this A wave. And that will end this bear market.